What is up, guys? Welcome back to another Turning Point video. And today I want to be recapping this trade that I took right here on Wednesday night. And it was around a 1 to 18 RR. And this resulted me in around $8,300 on my loosely funded account. And I'll put the picture right there. But yeah, I just want to go over the simple framework of what I saw and how I took this trade and how you could take trades like this too. So let's get straight into it. So first, I went to the hourly time frame. And it was the previous session, right? I always use fibs, as you know, a lot. If you're in the Discord or wherever you are, our main thing we use is the fib retracement tool. So I took it from this prominent low, meaning the most external low, to this high, the one that stands out the most, right? To the high. And our low of day of the previous session was that 786. And I mean, doesn't get better than that, to the tick. Also, it was on this rejection block right here. So first, that's a bullish sign, right? We're delivering from that fib retracement, that PD array. Now, we had the 15-minute CISD. All this is meaning is that it basically made a higher high broke structure, right? You see 15-minute, all these up close candles, sorry, are getting respected right here. You can see pulls back here, pushes down. Now we get the close. So now we know order flow is changing, right? This also looks like we're setting up for a market maker buy model, right? We have an external high right here, not internal high, sorry, right here. It looks like market's trending nicely towards it, right? We're expecting bullish PD arrays. So this move was sponsored. The first fair value gap that was tapped into from that sponsored PD array, which I considered fib retracement levels as PD arrays. Here, tapped it, going up. So then I was like, okay, in Asia, I want to see buys, right? So I took my fib retracement tool again, and I drew it from another prominent low to this prominent high right here. And I liked how this 0.5 or EQ of the range, and as you know, every range usually needs to have EQ tapped before it could return back to the objective, whether that's in shorts, return to EQ, come back down, vice versa, right? Tap that level. And then also that level aligned around with the CE, the consequent encroachment, or the 50% of the hour, the fair value gap right here. To see it tap that right there. So price is delivering from that. And I was like, okay, we're bullish, right? Now, another thing I saw is that we had relative equal highs right here. Stacked equal highs, basically LR, right? This high was this high wants to get swept. It didn't get swept. Came back down. So I took my line right there. And let me put it there so it's exact, right? Now I hopped on the 1 minute chart while we were trending to those equal highs. And we were delivering pretty quickly, right? As soon as we tapped that C of the hour for value gap and EQ of the range, look at that bullish reaction, creating that rejection block. We also pulled back in to 0.5 of the range right here, kept going up, right? As you know, OTE is the GOAT, is golden. So here, I thought we were gonna take it right here. We didn't take it, and then we made a leg down. So I was like, okay, I have an entry setting up right here. So I took my rectangle, drew it on this first bearish for value gap, and then let me draw right. Yeah, that first bearish for value gap right there. And then I was just gonna wait for inverse. And that's once we got the inverse right there, showing me that bearish PDRs are being disrespected, bullish PDRs are being respected. Also because all of these bullish for value gaps are being respected, put in right here. Took my long, put my stop loss at the low because I was like, these equal highs, in my discretion and in my intuition, these equal highs are so relative that we were probably gonna take them. And also how you could also gauge how much market's trending or how much it wants to hit that objective of how aggressively it's displacing in that area, right? So we had that, took my long, and it delivered pretty well. And then I entered one NQ to that position. And then I took partials right here at this high was that objective I was talking about, and we swept it really well. I wasn't worried because just had to mitigate EQ of the range again. Look what happened, mitigated EQ, 618. So I took a partial there. And then now I also added back to my position right around here. And this was this little range right here. So the reason I added to the position right here, I took my fib. We were trending, right? London was about to open 2 a.m. around 3. Took my fib high to the low. I was like, okay. My favorite fib number to use is the 706 and the 786, right? But I always filter the fib numbers based off of which level has more confluences, right? So we had a 786 right here. And this 786 aligned in the CE, consequent encroachment, of that 10-minute fair value gap. And it also aligned with this 10-minute order block right here. So I limited that area again, and put a stop loss for that partial right there at the low, and it delivered pretty well from there. And then also another confluence I had was a low volume node from the session volume profile from a couple of days ago, and it was right here. It's right around here. This low volume node right here. And you see, prices are rejecting from it before. Price then broke above, and now we were supporting it. No candle closures through it. Supporting it. See all these wicks. The wicks do the damage, bodies tell the story. We're supporting it. Supporting all these other PD rays. Now we print it up. And then the final TP for the rest of the position, and why I didn't target all-time highs, is because I wanted this devil's mark. And the reason this devil's mark is so strong, all the devil's mark is a wick, is a body with no wick. So a candle with no wick. So you see there's no top wick on there. And there's also, if you observe on the 15-minute, there's no top wick on the 15-minute. There's no top wick on the 10-minute. There's no top wick on the 5. Same thing with the 1-minute. And also that's Asia high for Monday. So as you know, session highs and lows are very strong areas of draw on liquidity. So I wanted to target that. And that's what we did. And that's why I targeted that. Fully out the position. You see price reverse all the way back down. And then obviously what did I say it has to do? Put the low to the high. Target back EQ of the range. Look how well EQ got respected, the 50%. And then price printed back up. So using fibs in your trading is just a game changer. And I suggest everybody use fibs. And if you guys want to learn more about fibs or the way we trade our basic framework, and we take trades like this every single day in the Discord. And also, if you're not on Discord, you could join. We list every trade we take in trade recaps. And also, you can see our member trade recaps for anybody that's in the free chat and premium. You guys could look at that and ask any questions you need or anything, whether you're in free, you're in premium. It's a community at the end of the day. So thank you guys for watching this YouTube video. Kept it pretty short, but that was really the framework for the trade. So thank you guys. I'll see you guys soon.